final day of REIT Week 2010 in Chicago, and joining us is Stephen Marks, analyst with Fitch Ratings. Thank you so much for joining us.
Yeah, thanks, Alan. It's a pleasure.
Corporate governance is a hot topic right now among investors. How would you say that credit management impacts corporate governance?
We would say that having a focus on credit management and maintaining a strong credit profile has been especially important throughout this cycle. If anything, this cycle has proven that credit is important and that strong credit management needs to come from the top. And so we view positively boards that are engaged in establishing credit limits and setting objectives and also compensating and evaluating managements relative to those metrics and those objectives.
And do you think that REIT's corporate governance best practices adequately account for credit management?
We do, and I think with an emphasis on best. I'd say that there are some companies in the sector that have put best practices in place, and throughout the cycle have demonstrated that they were proactive ahead of this cycle, and were focused on liquidity and access to capital.
And looking at the market overall, you recently released a mid-year report on the REIT sector. What were kind of the major themes that you discussed?
Sure, we published our mid-year outlook on June 9th, and we did upgrade the overall outlook of the sector to stable from negative. And the reason for that on the positive were a couple things. One was that the sector has de-risked. They have reduced development pipelines. They've tendered for bonds below par to effectively kind of turbocharge the delevering process, scaled back on dividends, and raised equity as well. So there's been a de-risking. I'd say secondly, leverage has come down from the peak of 2007. In addition, there's been good access to capital and a significant improvement in liquidity. So that's, I think, some of the drivers that had us move the outlook back to stable. I'd say some of our concerns still are the fact that the sector overall, we believe, is still slightly over-levered. There's still fundamentals, weaknesses in fundamentals at the property level, which we think is going to persist depending on the cycle or depending on the sector, 6 to 12 months. And further, there's also the risk of the EU contagion, which we've seen over the last month or so. Spreads have widened out, and there's been a lot more volatility. And so we are concerned about access to capital a little bit for, say, some of the weaker credits that may be a little more challenged to raise capital in economic terms.
All right. Well, thank you very much for joining us, Stephen.
Yeah, thank you, Alan.
For more information on this and other REIT news and analysis, check out REIT.com.